Okay, good evening. Good evening. I'm going to go ahead and start the recap call for today. Today was Wednesday, July the 22nd, 2026. And going to go over the bias that we had in the Discord in the beginning. It was definitely a little bit of a choppier session today. I would say it wasn't as, the greatest session that we could have. We also had news building into the second half of the day with Donald Trump speaking. Around like 1:30, and so a lot of it was I would say the second half was more engineered towards that. So we'll look at our bias that we had here in the Discord really quick. And let's look at this Discord pre-market. Okay, so pre-market, we want to see a bullish scenario potential or a bearish scenario. I like to give like two different scenarios of what we could potentially see. And so looking at the higher time frame context, we're looking at daily price has reached the higher time frame area of demand. H4, we're filling a fair value gap around 29,000. Overnight traders are most likely trapped from 29,300, and now they're trading near 29,000, roughly 300 points lower. So essentially what I could see was the overnight trade had fell off of a cliff and the overnight trader was up on shorts, right? So what I was anticipating was potential short covering at the New York, which we ended up getting. But it's the way that they engineered the New York Open is really what was making it difficult because they presented the move pre equities open. And then bearish scenario, and that's what creates FOMO, which I'll go over. But the US dollar, okay, so bearish scenario, the US dollar continues to show strength, which could keep pressure on NQ. If sellers remain in control, we could see additional liquidation towards 28,900, which would be like breaking the low of day, or 28,800 or potentially 28,750 area around. It says the New York Open, but it was supposed to say the market open. I don't know why it's just New York there. But game plan, we've already put together two solid trading days. So Monday and Tuesday were pretty good. There's no reason to really force anything today. We'll stay patient for the criteria, wait on edge until line. If the setup isn't there, we won't trade. Discipline always comes before opportunity. See the trading floor. Okay. So basically, what we were trying to see was, like I said, I wanted to see from the beginning, we've been seeing dollars being bullish. So I was anticipating at first when we were going over dollar, like possibly some liquidation on futures and the indice charts. But because of what we had already seen from the overnight play, right? This is going to be the overnight play here. Starts here, right? Daily open was in at 29,300. Let's just kind of round that. And then the overnight price fell off into uh, lower areas of that H4 expansion. So if you're looking at the H4 demand, I was like wanting to see price come down on that left screen. I was wanting to see price coming down to this area. And then when I talked about us filling, right, the FEG on the 4 hour, which would be the fair value gap here if you're looking left, and then that fair value gap here on the right screen on the 1 hour. We were wanting to see this filled and then price run up like it did. Now, as you can see here, okay, price, I'm going to jump straight into just NQ here. So let's go ahead and move over really quick. Okay, so when you look at just NQ here, okay, we had that overnight price that had fell off, and then we had before equities open, because this is going to be equities open right here, 8:30 a.m. Central Time Zone for me. Now, the market likes to move, and what I like to see is what's called four phases: accumulation, markups, so higher highs and higher lows, and then price will go sideways and start to distribute as it's starting to sell off, and then mark down by making lower lows and lower highs. And so, what they essentially did on NQ is they created the accumulation pre-equities open. So they basically made everything happen around, I would say, like 8 a.m. And then we started to pop out of the area 8:05 to 8:10, then 8:10 to 8:15. And then that next candle right here, 8:15 going into 8:20, right? We ended up extending higher, breaking structure and showing signs that we're, breaking out of this little small accumulation. Now, uh, a couple things I'm going to go over is one, I personally just made a mistake at the low end of a range trying to fit a short after we had slipped this LOD because I was with the bias of the bullish dollar. So I wanted to see a little bit more of a bullish dollar. And anytime that we see, like a forceful move off of the opening range, I was anticipating possibly some individuals to start getting back to position and maybe we roll back over to the LOD because of how the wick was engineered. But again, like I said, when you look at like a 1 hour, 4 hour, right, you can see we were filling the fair value gap that I had talked about pre-market, which was here, right? So we won this, we had already filled that area and we hadn't really shown any signs of weakness since we filled the area. And so where I ended up getting a little bit trapped was because I had that FOMO of the move breaking out and just taking off without me. That first 5 minute candle closes, so this is 8:30 to 8:35. You get a sign of strength, and then the next candle was also a sign of strength, and then we ended up breaking through these highs. Now, where I could have done a little bit better on a 5 and 1 minute setup, even though it did just take off like this. I don't like to force myself into a trade, but I do like to play fair value gap fills that are like bullish continuation that have true edge. So the one thing I would say for me personally is 8:30 to 8:35, right? First candle pops up there into those 29,150s, and we're like attempting to break out of that low end of the range at London. Let's just say London high essentially at this point, because London had opened down here and this was like the London high. And so as we come into this, the first 5 minute candle was strong, and then we had that second candle, which ended up digging into the fair value gap. So what I mean by that is at one point, right before that candle ever printed and the first 5 minutes came out the gate, you don't have to force yourself and just press the buy button and get stuck, because that's how you end up getting getting filled on the 5 minute FEG or the 1 minute little test. But as soon as this candle closed, I would say immediately, because it opened up so strong and we were attacking from a low end of range and we had responded so well in that higher time frame zone. Instead of looking for the short, I waited till we got through the highs, like the 29,180, also like 80 levels as well. But instead of looking for that short, I think what I could have done a little bit better would have been, here's 8:30 to 8:35, right? So this is 8:30, oh, excuse me, 8:33 to 8:34, and then 8:34 to 8:35, and then we get that next candle. So in that second candle after the sign of strength, right, and the equity's open, if they come to fill 50% of the gap, you want to be ready. Okay, so you're using the body open and the body close, and if price was to come back and fill and hold, right, basically this expansion right here, right? Fill and hold inside this area. So hypothetically, what I'm saying is this: like 5 minute candle closes, next candle opens and can't close, and like basically prints a wick like this into the area and then goes. That's kind of what, and on the left side here, okay? That's what we would want to be anticipating for a bullish continuation if it's a forceful move that doesn't allow us to get into the trade, okay? And so looking at that on a 1 minute, when you look at this candle, very specific, right? 8:35 to 8:40, we still haven't taken the like internal high there yet. We're very close, right? Like the high on that at this point was very close, probably like 3 points off of the highs at that point of what we were trying to break through. And so for me, I wasn't really anticipating to grab a short until we cleared those highs and I seen a 5 minute sign of weakness. So um, this information that I'm about to show you guys was pretty much just blinded from my view, just because of the fact of I felt like I had already missed out on the long position and they weren't going to fill fair value gaps on the way up. But lo and behold, right? They actually come into this area. They never close higher, and then they start to break down here from 8:35 going into 8:40. Now, a lot of the best trades that I take are going to be in the first 15 minutes of the hour or the last 15 minutes of the hour. So that was also, part of the bias too. Is like I don't really care for trades in the first 5 minutes of the equities open, and then I really don't want to take the trade until it's like around that 8:40 a.m. my time, into like the last 15 minutes when it's equities open. Okay. And so 8:36 going into, I would say 8:38. Now I was tempted to short this just because of where we were at, but because we were so far from daily open, right? I wasn't really wanting to do this unless we broke through the level and then got a sign of weakness and I could try to play back to the what I call shitty New York price. Okay. Um, and so candle right here, 8:38 to 8:39, and then you have 8:39 to 40. So essentially what you're seeing is when price engulfs like that and it starts like this is going to drag sellers in. This is going to get people to start to sell this looking left area thinking that they're not going to slip these highs. And it's a trap on the 1 minute, right? Because that very next candle, what does it do? Engulfs, right? Engulfs and pretty much, and then also wicks that high, so it tests up on like smaller, like 100 tick charts or smaller charts in a 1 minute. And so they definitely show that they wanted to push that higher at that exact moment. And so what I could have done better right here, okay, knowing that, excuse me, knowing that we are still very bullish after that first 5 minutes, and then seeing how this candle was starting to 8:35 to 8:40, and we still had the liquidity to deliver, I could have possibly played this a little bit better right here, right? But I was so focused on let's slip the high and see if we can get some short cover or short or buyers to cover and we see some liquidation. So being in this situation right here, I would say this is still a really good trade. Like say you were entering off the fair value gap in that second candle after the candle kind of showed you the strength. you could have been using like this as your low. I like to use the body candle low right here. So like this low here, getting in somewhere in those 130s to like 140s. Let's say you essentially got in when you seen it starting to really cook up here, like 140 with a 20 handle risk. I still think based on this right here, you would have been good. And then that next candle like that, you would have been really good. And then always thinking, let's say if this is hypothetical, if I would have taken this trade, right, where's that 1 to 2 risk reward, right? And so now we're at that 1 to 2. So if you're so high on the range, what you could do is you could go ahead and you already have now you have like the break of structure through those London highs at this point. What you essentially could do is go risk off and now start looking left to get right, okay? And so like this would have been a very forceful type of trade, and that's why I didn't take this trade. But it did produce back up and take away the range that I talked about, the overnight trader, which was very healthy, lower lows and lower highs, right? And so sometimes it just happens. Definitely, when I go back over the tape, I've seen exactly what I did, and it's just, sometimes it's just mistakes, okay? And so we had the low end of a range on that far side. We had lower lows, right? And basically, because of the higher time frame understanding of the 4 hour, the 1 hour FEG fill, we understood that shorts were covering. And so that's where, like I said, getting trapped here was kind of okay. Now, I was also looking at these buys, okay, from this perspective that I'm showing here, right, to extend up off that 1 minute to go ahead and push on through up to like 29,250s. I was looking at that as well, so that was kind of clouding my judgment, I guess you could say, in a sense, a little bit. I was like wanting to see, I was like seeing this, like, damn, should I just play the continuation buy, right, and push that through possibly to 29,300 as close as I could to, daily open. And so, where I ended up taking my first scratch though is when we ended up coming up above the London area high, and then we printed this bearish candle. So at one point, all you could essentially see was this, okay? And I seen this bearish candle, and then I seen this was the time window. So now we've drawn on liquidity on the internal liquidity at the low end of a range. That was the only thing that I would say is the real key though, is like where that liquidity was. And now we're in that timing, first 15, last 15 minutes of the hour, and we're starting to see the buyers who probably bought like 29,000, let's just say, in that zone somewhere. They're probably exiting in an area like this because they're up almost over, I believe, like 180 handles right there. Okay. And so price, time, context, understanding, like people possibly could be exiting in this position. 29,180 is one of my favorite levels. Now it come down to the timing. Okay, so we ended up getting this 5 minute sign of weakness. Now when I see I do the same thing on the buy side that I do on the sell side. So when I seen this sign of weakness, I'm starting to think, where is that New York low, which was here, like the actual, since New York opened, I always want to know where the buyer's liquidity would be. And then we had liquidity to the downside, which was engineered pre-equities open. Okay, so I like to draw my line when I see the signal, and then on the right side of that, if it's the right time, right, that I go over all the time, I like to play these type of setups. Okay, so we ended up having that sign of weakness. Usually in the second candle is where you're playing, and so like right in here, as we started to come back up, or as we started to break down in here, I started to look for 1 to 3 shorts to the downside that would be attacking these individuals who bought essentially inside this fair value gap, right? Like anyone that bought like right here in this left window, right? Like I was basically getting ready to attack those individuals, and then the no wick area on the equities open, okay? But as you can see here, okay, ended up taking the trade, put our stop loss at the high, and then I think it was 853 going into 854, price extends higher and pushes us out, okay? So that was a scratch for me on the stream, is what it is, right? This is what it is, okay? And then, okay, we ended up pushing, this was 830. This was that first one that they pushed us out. Now, price continues to go higher. So let's go back to 15.5 here really quick. So we got 850 to 855. We got signs of strength. And then we have 855 going into 9. We have 15 and 5 minute bodies closing super strong, but they've left behind massive expansions, okay? And so for me, what I was wanting to see is maybe we could see price come back down below New York and we get a chance to buy it again there. But at this point as well, right, we hadn't reached daily open, which was, pretty difficult on, like I like to sell above daily open, or like to sell when there's a draw on liquidity. But also this presented a pretty good opportunity when it comes to our multiple, and we were able to actually read the trap candle so that we didn't come to such of a loss on this one here that I'm about to go over, okay? So now we fast forward to 9 a.m., right? Some of the best trades that we've taken have been at 9:05 going into 9:10, right? Reversal type trades, or trades that are pretty much dissolving from that equities open. And so same thing happened here. This is something I want to talk about too when it comes to buys or sells or, fighting directional markets is you don't want to guess tops. And what I mean by that is like, that's why I said I want to have criteria of like, I want to give back above daily opened, or I want to sell or give back a position to buy. Um, at a draw on liquidity, right? And so you don't want to guess tops. You want to be in alignment with context. And then when it comes to buys, you don't want to buy jackknives, right? So you don't want to just continue to buy, and just waste all your ammo on the left side. And then by your fourth, shot that you want to take and you have no ammo, price is running exactly the way you want it, okay? There's a reason for that. So going over our second trade, like I said, scratch here, noob trade, low end of range, FOMO from the buy from the equities got me. Okay. Now going into 9, we ended up getting that sign of weakness. Now I do like to look for that sign of weakness in this area. That doesn't mean I'm immediately going to take a trade. Okay. It's just giving me a signal that there could be buyers liquidating or vice versa. If this was a sell side move, it would be, yeah, buyers liquidating or sells covering. Okay. And so what all I could see at 9 going into this was I'm waiting for that first sign of weakness. Okay. So that first sign of weakness, now we are drawing on some of the liquidity, but we haven't reached above daily. Now, sign of weakness here, immediately, same thing, same target, same idea of what I was wanting, right? Draw your line down to the target. The target was basically the New York Open, like I said, no wick candle, and then getting back into fair value gap and possibly 29,050 demand. Okay. So sign of weakness. Now, when you've got that sign of weakness, you want to be able to identify a 1 minute mitigation. Okay. So the trades that I ended up giving out was in that second candle. Okay. We in that second candle here, 905 to 910, that favorite time that we like. And then we ended up looking for shorts. We were thinking risk to entry, right? So 1 to 3, 1 to 5s. We were looking right in here. This was, let me actually check the time that we took the trade really quick. Let me do that really fast. Where did I put that really quick? Let me check this just really quick because I know the exact time we took the trade, but I can't really remember it all the way. Okay. Okay, so this would have been okay, so we'll look at the exact minute. Okay, 9:02. So it's going to be after the 5 minute candle close. Okay, and then I start looking at what time was that? So cool. It was in here. 912, sorry. Okay, so 912 was the entry. I was framing up off this candle and like pretty much putting my risk at the high on day, right? And then what I was wanting to see, right, what we were wanting to see, right, was price break back down because you have your range low. This would have been like your low right now, and this would have been our high at this situation. And what I wanted to see, if you look on this left screen, is I wanted to see price break back down and fill the FEG and maybe come back to that New York Open, okay? And so one thing we knew that we had to focus on coming into this, let me make sure that we don't have all these lines on the chart here really quick. One thing that we knew coming into this was when we took that short up here at the 9 a.m., right? So I'm going to bring it back here, is we were going to need to break past the trap candle, okay? So make sure it's 1, 3, da, da, da. And when I say trap candle, what I mean by that is this 5 minute candle, right? After they broke higher, they closed higher, and then they put a little trap candle here. So essentially this area, okay, is a trap. And like we were using it as like a reference point to understand like what we were trying to see, okay? And so say you took the cells down there with us. Now it did produce, I believe, a close to 5R, like depending on where you got in. Like some individuals did get in with that risk high exactly, like something like this. And it did get very close to 5R, but we were just looking for 3R to deliver. And then what happened was price started to, as we started to cover and as we started to see as shorts that we weren't going to get that break of structure through that trap candle area, that's when we started to read not only what we need to see to exit the sell or like reduce our risk down or trail it, was we're starting to see the bullish continuation move. Okay. And so for me, what I came to see at this point was price started to break down. This is all you could see when we were in the short at one point. We thought, okay, we're definitely in here. Okay. This was like the 262s. 1 to 3 sell. So we're thinking, okay, we're over 3 times our risk. Anytime we're 2 times our risk, we're usually risk 20 handles, right? So 40 points, we're usually going to be, risk off in a situation like this. And so once we weren't getting past the trap, we were already risk off because we were past 1 to 2. And then I was basically saying shorts are short lived. So last up candle in the down market, right? And since we were able to get above those 250s, we were able to trail our risk on whatever runner that we had because it was either we were gonna, come back and hit, or we were getting to break structure and roll back to New York and possibly back into demand and maybe even through that low of day. But they fit this trap candle, okay? Right here, as you can see, they fit that trap candle, and then watch the very next candle. This was the key to everything, okay? The 5 minute engulfing candle. See how it engulfs off the trap. Now, most people are gonna, freak out and spaz out right here, and start doing all kinds of stuff, right? Because they don't know if it's really gonna sell off or whatever. But for me, I already knew that like that sell was getting ready to come off. So one thing I could have done better here as well is I ended up leaving. We had I think it was like 12, 13 points in profit with half volume, leaving the trailed risk right here, even though I seen my 5 minute signal, right? Now, what's really good about this one, okay? The reversals happen in the first 15 or last 15 minutes of the hour, okay? Now, if I can't get in inside the accumulation or my order is not in the markup, right? Then if I take a trade this high, like 5 in 1 minute, I want this trade to be at least a 1 to 3, and I want to be able to protect myself at the first 5 in 1 minute, 15-minute break, okay? So right here was the signal, right? The 5 minute sign. Now, when you go back and you look, okay? When you go back and you look at this sign here, the 5 minute signal, now something I want to show you guys that's really important for this 15-5 entry and timing, okay? When you come to this area and this is all you can see, and you've got the signal, your mind immediately does the same thing I showed earlier. You draw the line through the signal candle, you know where your target's at, you know where your risk is going to go, and you're only thinking about these things if it's the right time, right? So if it's in the first 15 minutes of the hour, last 15 minutes of the hour, right? So this happens to be 9:45 going into 10 a.m. So you're not taking the trade as it's pushing up. You want to be buying when the market's crashing. You want to be selling when it's taking off, okay? And so go back to 1 minute here really quick. And here's the thing I want to show here on this 5, okay? Once that 5 minute candle closes, you're waiting for the pullback, okay? 50 to 55 back into the demand candle, and you're thinking risk to entry, okay? So once you've got your signal, here's number one thing you should do, okay? Signal, target, okay? So signal, draw a line to target, okay? You should have time with these type of setups. Now, once you have the target and you have your signal, you're thinking, where does my risk gonna go, right? My 20 handle risk, right? And then where's the placement on that 5 minute edge? And then you already have your target, okay? And so a lot of times you'll see the sign of strength, you'll see the pullback, and then by that third candle, it's gone. So after your signal, you can write this down. After the signal, the next candle is usually your 5 and 1 minute entry, okay? Like almost every time it happens this way, unless it's wrong, okay? So 5 minute candle closes. Now you've got 50 to 55 candle closes here. And I'm going to move the line just for this example so I can kind of show, right? You already know where what you're trying to draw up and what you're trying to divide. And then you're thinking 20 handle risk from the lows, right? So like, let's say a 1 to 3, just getting above those highs. And then there would be a 1 to 5 to reach the daily from this spot here, okay? So you'd be risking 20 for 100 handles right here. Now, the thing about this is most people aren't going to frame it up like this, and most people aren't going to frame it to where they have the 5 minute low as their the 5 minute low and count up the 20 handles like I show. What's really most likely going to happen is you're going to see it from like this perspective, okay? Like you're going to see it at this point right here, and then as that 1 minute starts to push, so I'll kind of give an example right here. As that 1 minute starts to push right here, as you can see, like this is the down candle you want to be playing in on the left, okay? Now on that right side window, when price starts to actually move, this is realistically on 1 minute where most people are going to get into a trade like this. Get into a trade like this. But as long as you're focused on forming your 1 minute signal, right? So you're looking for a 1 minute price action shift inside of the 5 minute demand zone, you want to be focused on your locations, okay? As long as you're getting your trade inside that zone after the signal and your risk is at that 5 minute low or as close as it can be, but at least 20 points from your entry, then most likely when this price turns around and goes like this, right? Now you're immediately thinking, what's 1 to 2 for me? Okay. 1 to 2 would be getting this next candle to probably print. And now you can basically go risk off on a trade plus a break of structure. You've probably gotten very close to your take profit at this point for 5R. Okay. And so this was a beautiful continuation. I believe at like the 9:45 time. But again, like I said, unfortunately, I was trapped personally wanting to find those shorts to the downside and was covering my position as this move was actually happening. Okay. And so went over the position I took on the stream. That was a scratch. It is what it is. Thought we took a pretty good position here at 9 a.m. Let me make sure that it's like I'm not like covering the whole thing the whole time too. Thought we took a pretty good position at 9 a.m. for sell side context, just things where, the one thing I'd say that I didn't like about it is it didn't have a draw on liquidity and it wasn't giving, the buyers weren't giving back above daily. Most likely the best sells happen because trades are buy low, sell high. The best trades usually happen in alignment with that point of interest. Okay. So that's why I missed the continuation buy up to daily, was trying to attempt those shorts there. Okay. Let me look at one other thing. Was there anything else that I had seen at the equities that I wanted to go over? I thought, let's see here, what time is that? I thought for a comparison too, like if you want, like we trade NQ and ES and YM on the stream. And so what I thought was really good when you go back and look at the bullish continuation was I thought ES is a little cleaner. Okay. Like ES actually engineered this nice push, right? Back up into, let me make sure I got the 1 hour. So I'm paying attention to higher time frames here. It pushed into the 1 hour FEG and basically let me make sure it's a 4 hour too. The 1 hour, yeah, it pushed into, let me see here, 9 a.m. So it was pushing and wanting to take the previous day highs, right? So that's what we were seeing. We had previous day highs somewhere in the zone 755s. But if you go back and study the same time, okay, you got the same signal on ES and it was even cleaner of a trade. Now, what I teach on ES is to risk 5 points for 15, which is going to be a 3R trade, a 1 to 3 risk reward. Or I teach to risk 5 points for 25, so like a 5R trade. Okay. So if you were on the stream today and you were looking for that continuation, like say you weren't short already, like, so some people will be like, okay, well, he's shorting NQ. I'll probably go ahead and get short on ES. Right. So essentially, let's say at that high you had, we'll think from risk to entry. So 5 points would be putting you in at like 755 with a 5 point risk. Okay. And then you would have been attacking down, right, to where the reversal happened at 9:45, which would have gave you over a 3, 1 to 4. I would say most people aren't taking the trade up there. They're probably taking it right here. Okay. So that still would have produced about a 1 to 3, 1 to 4 based on the metrics that I go with. But again, like I said, as price started to fall over, all right, you can see here clearly, right, like they weren't done. Like they pushed up, they closed bodies higher, and they pulled back into the range to fill the fair value gap on the 15. Now, once we know we're filling the fair value gap on the 15, something I want to show here is going to be ES 15 and 5, right? Because it kind of shows the same thing. And I'm going to go back and show this on NQs. I don't think I showed what I'm trying to show here. Now, matter of fact, let's show this on NQ first, and then I'll show it on ES. Okay. When I took this position, or when we were able to take this position here, like say if we were to take this, I used to plot. I always do this actually. I plot positions on even if I didn't take the trade or not. But let's say we would have executed on that area I talked about inside the 220s. Now, again, everything is fractal. So if I'm taking a 5-minute mitigation trade, right, I want to make sure, okay, that I'm inside a 15-minute demand, okay, when I take the order, okay? So what I mean by that is like, let's say you see this trade going up and you took it here, you're way too late. You see what I'm saying? Because you're outside of the demand zone, right? You're outside of the discount zone of this part of the range. But if you take it like you get the sign of strength, second candle is usually where your order is, and you play it on the 5-minute, even like a 5-minute breakout, you're still inside the location. Why do you want to be inside that location? Because if trades flash back or do anything like that, you're less susceptible to taking on the heat, right? If you take the trade here, right, when it's at the 250s, it could easily, right, as it starts to go up before it gets to the high, spike the FEG right here and then go, and you're pissed. Okay. And so I thought that was key to like really understanding, like if I was like going in for that type of position, to make sure that I was playing like whole level and I was framing up the 5 15-minute demand together. Okay. Now, another thing, like I said, on ES, if you're looking at that same move at the same time, right, 9:45 going into 10 a.m., it's the same thing there, guys. Look at this was the signal. Okay. So you don't know anything at this point until you get the 5-minute candle to print bullish, engulfing here. As soon as that happens, my mind immediately, okay, doesn't matter what I'm trading, immediately, as soon as I get this, my head sees the target, right? So the target would be the shorts from, equities here. Draw your line from your signal candle. And then in your second 5-minute candle, usually you're wanting to, like I said, you're wanting to focus on when you take that 1-minute entry. Okay, so let's go to the 1 minute here really quick in 5. This is on ES as well. Okay, so when you take that 1-minute entry, here's how it can look differently on the 5. If you're taking it in a good spot, okay, you're taking it inside the 5-minute demand candle or discount candle, whatever you want to call it. Okay, if you're taking the trade late and you're going to be susceptible to risk and flashes down, right, you're taking it outside of the accumulation. So let's say you took the trade as it's pushing up right here. As you can see on the left, you're outside of that zone. Okay, so you want to do your best to keep your risk down, right? Especially with ES risking 5 points. Okay, you have your signal candle, and in your second candle, you're taking the trade with a 5-point risk. Okay, and so looks like this. You got the sign of strength, right? Engulfing candle. Looks like a V-shaped recovery continuation. You already want to have these preset. I don't have them for ES because I don't trade ES every day. Okay, and then you have your 3R zone, and then you want only time you're shooting for 5R, so 5 times your risk, is if there's actually a liquidity target and you can look left and have something that you're trying to deliver on. Okay, so like in this situation, we would shoot for 5R for sure, right? 5 for 25, and the reason being is because if you look left, we already knew that we were on bullish continuation, and we actually had targets for high on week 75.80. Okay, and so hope that kind of helps out with the understanding, like, of what we're doing here when it comes to especially ES and NQ. Because, like I said, this zone right here, when they actually recover this trade, let me go back. When they recover this trade at 9:45, I actually think if you go back and study these both at that same time, first for 10 minutes the hour, last for 10 minutes the hour, that these were beautiful continuations, even though they were a little bit higher on the range. Okay, and that's really because, like I said, how they engineered the equities open and created so much FOMO. Okay, so anything else I can go over? We talked about our dollar buy. I still want to see strength on there. Won't really talk too much about SpaceX and Nvidia and Tesla right now, but SpaceX is obviously cratering down to the levels we want, like 100, 110s. And then SPY and QQQ, I think, have some really good liquidity to go higher. But we do have some gaps at like 700 and gaps on SPY like 743. And then let me look at oil here really quick. Not a lot to work with when it comes to oil other than the higher time frame we talked about on stream. Daily and 4-hour reached so basically the daily has reached the level where we had fell off, right? The initial balance area that we had looked at, and that has reached back after what I believe is short covering off that $70 a barrel level. Okay. And so Trump said there wasn't really anything going on, tensions weren't really rising, everything's great America. But for some reason, looking at this price, and he basically said that oil was going to, I think it was like 61% or something like that. We have power over most of the world's oil. So he was just basically explaining that. But at the same time, it's like, well, why is the price of oil going higher? So there's lots of little different things that are going on. But yeah, I think the play of the day and what really happened for me personally is, like I said, is just FOMO at the open. When they take off on a candle right at the open, even the first minute it takes off, you've got to be patient, understanding what you see after that first 5-minute close. Okay, so we'll be back again, same time, same place tomorrow. And then we're looking to trade maybe tomorrow or maybe just Friday or one of the 2 days, maybe not both. Okay, because we had a really good Monday and Tuesday, and then today was dragged out. Like mental clarity is just kind of like foggy. But I think that, by the time I go to sleep and wake up tomorrow, that we'll have, 2 really good days to lock in. So price has been really good. I won't complain, especially if you're waiting on the criteria. Okay. So appreciate you guys. See you guys on the next one, and have a good rest of your night.